What else do we want to look at? One, two, three, four. Am I missing anything? What's up, everybody? Is this streaming? Let's see. Oh yeah, good stuff. Give me just an extra minute over here, trying to get myself organized. Let's see. What the hell is in there now? 1, 2, 3, 4. Yeah, just get on the other ones. Oh, Pablo! How are you? Always good to see some fellow Greeks in here. I see enough of the Italian side, you know? Oh, we get the Latin American side. What's up, everybody? Hope everybody is doing okay. I'm sure some of you bears out there finally got some meat to eat, which is good. We got to keep you guys involved. Hold on. Let me mute a few things here. Oh, here it is. Forget about it. Hold on, let me just mute a few things and we'll get going. All right. What? Oh man, we got more than one Greek? Unbelievable. We got Greeks coming out of the woodwork tonight. I like to see it. Atlanta? A Greek out of Atlanta? All right. I posted a couple things. I don't want to bombard you guys with too much. I don't think there's any reason to go overboard here, because again, we've been looking at this stuff for a few weeks, maybe a month now, right? So again, the stuff that kind of had us a bit concerned is being resolved as we speak. So I think there's a few of the things are more important to keep tabs on now than others. Now that we've got this process underway, and again, the big problem, which many of you know, was kind of that spec bubble that was inflating underneath the hood of the market and was getting really carried away, has been, I mean, there's no easy way to say it, has been decimated. I mean, I honestly, as even as skittish as I was, I didn't think that they would let that much air out as quick as they have. Now, again, we talked about some of the more, and this is a little oxymoronic, but some of the more quality spec names, right? A few of the names that had better fundamentals, actually have some revenue, were holding up a lot better than the others, right? The other garbage. But even there now, and I think that's a really good sign that the leaders of those bubble stocks are starting to get clipped. That's why is that a good sign? We needed to see that. Like, you know what I mean? It's part of the process. You don't get through this until that happens anyway. You're not going to avoid that. As much as, if you're holding these names, you would love to avoid it because they're, maybe you start telling yourself, maybe this, my stock is better than the rest. But when they let the air out of these things, they let it out of all of them, and it's only a matter of time usually before they find the one you're holding on to. And there are some exceptions, right? I'm sure someone's going to dig up one spec name that's not down 50% off the highs over the last few weeks. But in general, the majority of them have been eaten up. And again, this didn't just happen this week. From when we started talking about a week or two ago, when they finally started to crack, each and every day, every bounce has been sold, and more names have joined the pack, right? So quickly looking through some of these things, what for anybody who might be new and don't know what the hell I'm talking about, talking about a lot of these story theme niche type plays, right? Oklo is my punching bag for no reason. I have nothing personal against Oklo. I think the story is excitable, right? Data centers and all that. We need power. I get it. But stock. I think it dawned on me today. This thing was at 200. This went to $200. I really didn't. I'm sure I've seen the price and I've seen the chart, right? We talk about it on every webinar, but today kind of hit home. $200 this thing got to. That's how ridiculous the move in these things has been. So you got names like that, right, where there are a lot of bulls, a lot of believers in the Oklo story. So in my opinion, even it's down $100 off the highs, but that's not even all that bad. You got some of the cheaper names that basically gave back their whole run there. We call them the Eiffel Tower chart, right? So they basically end up looking like this. And right back to where they started, generally. That's usually what happens. Yeah, I hate to say I told you so, but but the funny thing is I can't even, as much as I would like to throw out an I told you so, it's not even an I told you so, because I kind of, you know what I mean? I didn't think these things were going to crumble. I didn't, first of all, nobody knows, right? And that's what I try to stress to you guys. Like, I didn't know that this was going to be a major top, right? I didn't know that these things would get hit 50% off the highs in a matter of a week or two, okay? But again, for all the reasons we looked at, and we don't need to repeat them again because we beat that drum endlessly, you had a lot of the ingredients, a lot of the similarities that we saw in the 2021 high, a lot of these blow-off tops in spec land, all the ingredients were there, if not more, this go around. And it all comes with the same chatter around it, right? You get pushback on certain names. People think, no, this time is different. This is their data center plays. They're the future. We need power. Or with the rare earth plays, you get Trump. They have to China. But it's always the same story. It's always the same story. Just different businesses, different stocks. Okay. So again, now, and the other thing that I mentioned that I think is even a more difficult question is, did we see a 2021 top in these type of names? Meaning that's it, game over. You're not going to see highs in these things ever again. And in all likelihood, the best you get out of these things is some range bound consolidation before they roll over again. That was 2021. Okay. Now, the reason why, again, we all have an opinion. Some of us may feel different than others about it, but I think it takes more than just an opinion to figure that part out. Because again, 2021, you had a liquidity issue, and if it pans out the same way it did in 2021, where liquidity starts to tighten up and drain for the next 3 to 6 months, you probably get a replay of 2021. I don't care what the storyline is. Again, the businesses, the story of the reason people bought the names all make sense. They always do. But when liquidity disappears, nobody buys stocks based on the story anymore. That's the problem. You need fundamentals. So what happens if you don't have that liquidity backdrop, you run into a situation like PLTR, where a stock can go dormant for years until their fundamentals finally catch up, right? They start reporting profitable quarters, and then the street becomes interested again. But that's if that story pans out. A lot of times you get a Lucid or any other EV play that was blown up off story back in 2021. I think the more important thing was, and I think what has to have everybody feeling good, unless you bought the highs in these things and you're stuck or took quite the hickey. And let me say this before we go on. As corny as it may sound, okay, for anybody who's on the newer side of trading, and newer, what I mean by newer is a few years into trading, okay, not a few months. I know on Twitter these days you can take your account from 1,000 to 10 million in 3 months. I get it. But in this game, if you're in just a few years, you haven't even seen different type of markets yet. You understand? So you're on the newer side of trading. You have to learn from these things. You understand? So even if you did get caught and you took a hit, right? And hopefully they'll knock you out of the game. You learn from this. And when you run into this type of setup again, 5 years from now, 6 years from now, you're awake to it, right? You learn from your mistakes. And as one thing about this game, it'll show you what you do wrong, and if you continue to correct those mistakes along the way, you'll find you'll be able to hang around long enough to make some money. But if you keep making the same mistakes over and over, obviously you're going to run into a brick wall. So that being said, right, just if anybody did get caught in a lot of these spec names or overheated names, whatever you want to say, I think the best part of this now, regardless of how the rest transpires from here, right? Because we don't know. Liquidity, a lot of the liquidity guys I follow, and we'll talk about it a little bit more if you like in depth, but to give everybody an update, a lot of the liquidity guys I follow who follow this stuff a lot more closely than I do, and I have some trust in them. They know what they're looking at and talking about. They still feel that liquidity is an issue here, okay? Not a systemic issue, okay? But certainly a change from the environment and the backdrop we were in. And that was the problem going into this. You had a lot of these things go parabolic, and then you had a climate change, right? So it was kind of a double whammy. So, but even if the liquidity, no matter how the liquidity climate transpires from here, right? No matter how it shakes out, I think at the least you had a lot of garbage go up with some decent speculative names, right? Everything went up. Literally, it got to the point where any stock that went nuts, you were trying to find another company that did the same, did a similar thing, no matter what fundamentals were attached to it. And basically, you just piled in and gunned that higher, right? So it got stupid. So this cleans that out regardless, right? It's a cleansing process. And even if we do get another run in spec names, and I hope we do, one of my favorite things about this market is participating in that. In all likelihood, there are going to be a lot of newer, fresh, speculative names that become a part of it, right? It's not going to be all the same names again all at once, kind of like, how it ended here, okay? So it's a cleansing process no matter what. And, at this point, do these things have further to go is really not even important, in my opinion, for the way I look at things. And I'll tell you why. But I think the damage that needed to be done in a lot of this area of the market has already been done. Okay, you can make the argument that there are several names that are extremely oversold in a short amount of time span here. Right, so you may find bounce opportunities and stuff like that. But what I think, regardless how we have to treat anything speculative right now, is a lot different than how we treated it over the past 6 months. Okay, and that's going to be a tough transition for a lot of people. If that does indeed, if that's how we come out of this, at least I think initially we have to approach it that way. Okay, because again, what happens is the risk appetite gets cut significantly, and the big problem I think in these names, you get a lot of bag holders now, right? It's not even bag holders of buyers at the highs. You had a lot of the smarter money who got in early that continue to roll positions, and they always get caught. They're willing to give to charity that last batch of rolls, okay, when a trend finally runs out of gas, okay? But if they like the name, so let's say like an Oklo, okay, let's say I've been rolling up call positions all the way up and I caught the bulk of this move. If I still believe in an Oklo longer term and I made a lot of money in it, instead of just letting these calls that I got caught in at the tail end of this go worthless, I'm willing to roll down. You understand? So now I'm willing to put in a little bit more money because this final roll here is useless. It's so far out of the money, right? It's $80 out of the money at this point. So what I'll do is I'll take a smaller portion of that money and buy something at a higher delta if I like the stock. And that's what we're going to start to see, right? We're going to start to see some of the bigger winners, the more, again, quality is not the word I'm looking for, but some of the names people like the most and have made the most money in, that's what we're going to start to see. We're already starting to see it. Players rolling down. Okay. So what I'm getting at is that's not a good thing, at least for us in the steam room and what type of flow we're looking for, right? We're looking for clean, high conviction, clean directional betting. That's not clean directional betting. So what's going to appear like call buying is in all likelihood just going to be players rolling down strikes. And what that does is it caps kind of the situation here. You understand? For us to have an edge out of the flow in a name like this again, and what I mean by edge, an edge to take a position in with some time, we need the action to calm down significantly. We need it to slow down significantly, right? You want the flow to go dead, literally, as dead as possible, okay? And then once we reach that point, and then you start to see an uptick in aggressive buying coming in, that's where you have an edge again in these names. You know, right now we're still dealing with, crazy action. Just right now, it's not just all call buying. They're rolling down strikes, and there have been massive put sweeps in this thing on the way down, in all these things. All right? And there's so many of these names. So many. It's insane. Okay? So, again, I don't think that's the most important thing right now, and that's not why I started the webinar off with it, but for me, that was one of the things, especially for my trading style, that had me feeling cautious and skittish, right? Because these are the names I like to play. These are the opportunities I'm looking for on a daily basis. And I have to be disciplined enough to stay away from it completely, let alone, take chips off the table, blah, blah, blah. But at the same time, while they come in, I have to remain disciplined enough to stay away from these things and not get drawn in by, they're down so much. Maybe there's a little bounce in it, because you never know, how much selling may be left. Okay. So again, I think the best way to approach these more speculative names now, and I'm kind of talking to more people in the steam room than everybody out there, because I think the sweeper activity becomes important. If we see a wave of aggressive buying coming in, right? And even if it's speculative, even if it's short-term, short-dated, right? That's where you're playing for oversold bounces, right? So that's where I think the play is. If we want to play these names, that's what we got to kind of look for now, until the flow starts to calm down significantly and we start to get cleaner action. Okay. But again, that problem is solved. And that was a big thing that had me uneasy. I think now, for me, more than anything else, is, where do buyers show up, and, how aggressive, how much of an appetite do they have, right? We kind of talked about this last week. It's not something you can predict, right? You can't predict that stuff. I don't know how aggressive sweepers are going to show up. I don't know what they're going to show up in. And I think now I'm at the point, just as a big picture view, right, where rewind a month ago, you kind of wanted to put the guns back in the holster and wait to see how some of this stuff shakes out. Now, I think, now that we're seeing some of this stuff resolve, where does the money rotate into? Okay, so I'll give you an example. What we've been seeing in names recently has been a little more of a defensive posture, right? So we've been seeing selective buying as far as post earnings, clean buying, coming into big pharma names, right? Stuff like that. Defensive names, okay, and that's kind of that was the part of the market that was set up. If you remember, we talked about, right? It was already set up. A lot of these names and sectors didn't need a rinse because they've been ignored, right? A group like healthcare has been the ugliest sector, and there's not a bull to be found anywhere in that sector, right? A lot of these cyclical type names tied to the economy and rate cuts, there's nobody to shake out there. Nobody's there, period, right? So if you see buying show up in these areas, and what I mean by buying, we're talking about sweeper buying, you're set up already, right? It's only a matter if you like the name, like the spot, and we're good to go. I think now we can realistically approach the whole market like that. I truly believe that, right? Again, I don't know if sweepers are going to show up and what they're going to start buying, but if we do see some buying come in and it's in a name or a group you like, right? I think you want to fire. now, as opposed to 4 months ago, 3, 4 weeks ago, where I think there was just way too much risk. It wasn't worth firing. Okay. So again, we don't know where the flow is going to show up, right? But if it does and when it does, I think it's something we want to strongly consider, especially if it's a name we like. Like this has been a name that caught action recently. Lilly, one of the first, honestly, that we started to see post earnings had the benefit of some positive news as well, and had a real nice run, as you can see. Merck this week caught some nice size action with time out in April. That's another thing we're seeing. Even the buying we're seeing show up in certain areas have a lot of time. I'll give you an example. Stuff like a Meta, right? Or even a Microsoft we saw yesterday. The big, what the hell's going on here? The big size we're starting to see show up in names like this are out in 2026. I don't remember if it was April or August 2026 in Microsoft. Okay. But so that may not be something you're interested in, right? But you want to see that type of good looking action come in a little closer, and you got some trade set up. Talking about Microsoft specifically, there was a little bit of bounce play last week. So you had some short-term, some buying in short-term strikes playing for a bounce. Nothing astronomical, but definitely sweepers dipping their beak. I think it was November 28th they were nibbling at. Okay. But for me, like especially stuff I don't like, I want the flow to force me in. You understand? I don't want to go into this hoping to catch action in certain names. I want the flow to come in and then put my eyes on names, if that makes any sense. All right, so that's kind of the approach I want to take here, because then I build a bias and then I ignore maybe some of the better flow that I kind of wasn't looking for. All right. What else caught action here? RKT caught some recent activity. They like to buy this name ahead of the Fed meeting. A lot of times the Fed rate cut play. But again, especially if you get these things on down days, you might have decent entry in these things if the flow's there. So I think it's more of an interesting, right? Each of us have a different interest in trading styles too. Like for me, this Microsoft is not really my cup of tea. You guys know that, right? Once in a blue moon, I'll build a position in a name like this, but a lot of times it comes, early in a trend, before it's moved, right? That sort of thing, kind of a contrarian play. For me, Microsoft trade-wise, because I'm more of an equity guy, right? I obviously would have to, I'm not going to buy the equity in Microsoft at $500. Doesn't make sense for me. But for those of you who play large caps and are looking to be more tactical, something like that would make sense. All right. So I guess it depends on your style. What else? LVS caught a little bit of flow. Nice size, but only one bet. That's kind of been hot recently. So you're seeing some of the rotation type names too get some interest. Okay. Again, this is early stages. If you remember, 3 weeks ago or 4 weeks ago, we were going into earnings season. We lost all the edge from flow, right? Basically, don't even ask me about names because the flow is completely useless right now. And now we're just starting to see the window open for some cleaner flow, some cleaner action. So we're seeing a few names see some interest. Right? Just to start, but you could probably tell in my voice that even just the start's got me a lot more excited than where we were, where it was completely useless 3 weeks ago. Okay, so I'm optimistic about that. You guys know, again, this is more of a personal opinion, so let me put that out there, disclaimer-wise. But But you guys know how I feel about kind of these cyclical names, right? I think they're set up really well going into 2026. Now, they saw some selling today because rate cuts are up in the air again, per usual, right? But ultimately, I think any selling in these things is going to find buyers rather quickly. And if you believe the Fed is going to cut rates, or whoever's running the Fed for Trump next year is going to cut rates, I think you're going to have a tailwind at your back in a lot of those groups. Okay, again, that's my opinion, right? Just strictly my opinion. Sweeper wise, positioning wise, and that you should pay attention to more than my opinion. We haven't seen the aggressive buying show up in that camp yet. It's been very, very selective, extremely selective. Okay, so obviously, when we do start to see that type of buying show up, I'm going to talk about it, right? Because it's noteworthy action, and it's stuff that I kind of leaning towards. I have an interest already. But we really, I'll give an example. You'll see a name like this, Freeport, especially when it's down, catches some buying. We talked about this. You got my blessing. If you want to buy Freeport with time, it's catching some flow. It's Freeport. You got to be, this is not going to be a smooth trip. It's a real pain in the ass. It's a real pain in the ass. So these are the type of names, in all likelihood, that catch at the least the initial activity when they start buying these things. If the action's aggressive enough, that's when it starts to spill into the underbelly of these pockets and sectors. And that's when things really start to heat up. Okay? So, again, maybe you want to dabble if it's a name you like, but nice and easy. You want to take it nice and easy. Let it come to us. All right? So, again, I don't want to spend too much time on names because, again, the only opinion you should be asked, the only insight you should be asking or looking forward to out of my mouth is in regards to flow and positioning. And there's just not a lot of it yet. So there's no reason to spend too much time on names. Here are some of the bigger picture things that may keep some volatility in the mix here, right? And again, the label I put on it, as you guys know, it's a trickier environment. I just think that's the main takeaway. It's a difficult environment. No matter what, whether the indexes go up or down from here, right? It's been and going to be a more difficult environment because of these things, which we're about to look at again, right? Just to give you guys an update of where we are. So this is short-term correlation. If you remember, we talked about being at an extreme low level where there's a lot of risk out there to things like what we've been seeing, where you get these VIX pops and these divergences and the whole 9 yards. And that's exactly what we've been seeing, right? So you got correlation has been lifting here over the past couple of weeks. Again, I don't know if I don't think we're gonna get something like this, right? We probably just get something in between that. But even that is going to clean things up a little bit. You understand? Like you guys have seen how bad the breadth has been. Okay? The breadth, the internals, they've been awful, disgusting. Okay? And that's what you get down here. When you're down here in this neck of the woods, you're going to get that ugly ass breath. Right? You start seeing the Hindenburg omen, right? Titanic syndrome, all that's from deteriorating internals. All those indicators flashing. Okay? But as correlation picks up, as you get a lift in correlation, that stuff gets resolved. That's the best thing that can happen. The worst thing that could happen is you get low correlation lingering and those internals just continue to deteriorate. That's what happened before 2000. That's what happened before 2008. That almost always happens before every debacle. So this lifting correlation, again, is a good thing and should have us feeling better, because if this lingered into the end of the year, we probably in all likely go into 2026 with a lot of risk in front of us. Okay, so that's where we stand right now on that front. And because of that low correlation, what happens is you get a rally for a couple days, right? Looks healthy, feels healthy, everyone's bullish again. But after 1-2 days of a rally, you start getting divergences all over the place, right? You start to see VVIX diverge, VIX diverge, credit diverge. So what I mean by divergence is these are warning signals, okay, that the equity rally is not healthy. And that's what we continue to see, right? I inverted VVIX so you can see it along overlap with SPY. But you get a divergence here, you get a rinse in the market. You get a divergence start to build up here, you get a rinse in the market. And then here, we got a divergence, and boom, we get a quick rinse. Okay? So again, better than, in my opinion, I mean, better than these divergences continuing to build up, because that's where they end up posing a bigger problem, especially on things like this. Okay? So this is corporate bond spread proxy, yield spreads, okay? And again, I have it overlapped with SPY and inverted so you could see the correlation there, okay? You could probably make it out, but we had some ugly divergence the past couple of days. So what I mean by that is, you see this equity rally here, right? We've had an equity rally over the past few days, but spread's not confirming it, right? Going in the other direction. And then what do you get today? Woof. Equities catch down. Okay? Again, the good thing is these things have resolved quickly. This is, you still got a pretty nasty divergence here. So we want to see this get resolved sooner than later. It can either get resolved with another day of selling that rinses it, right? They catch up equities, or we get bullish divergence into some weakness in coming days. And that's what usually happens. Here was an example of that. Okay? You had this divergence, and then pink, bullish divergence shot out of a cannon there. What we don't want is this. All right? This is before 2025, the beginning of the year. And you could see as the equity market continued to make highs, this no dice. All right. So again, we'll see how this plays out, but you still got some nasty divergence here that we want to see get resolved. What else we got here? These are credit default swaps. And same thing, inverted. And you can see the divergence there too, right? Equity markets continue higher. These have been chopping around at the least. But here's the thing too to keep in mind. SPY is no longer the equity market. I don't care. For anybody who's trading the S&P 500, okay, and you're not aware of this, you're lost. Okay? NVIDIA, Goldman put this stat out last week. NVIDIA is more highly correlated to the S&P 500 index than the 500 companies that make up the S&P 500. Okay? So you're trading, you're basically just trading a few names. Like most of you know that already. But it's not, you're not handicapping the market anymore in SPY. Not happening. You know, when people say, oh, I think the market's going to do this, or the market's bullish because SPY looks bullish, or SPY is going to break this level or come down to this level because buyers will be there because they're bullish on the market. that's nonsense, right? If you want a true measure of the overall or the 500 companies in the S&P 500, you got to look at a thing like RSP, which is equally weighted, right? And look completely different. This has been basically consolidation, right? So what I'm saying is there are two-sided risks, okay? We've seen the upside risk in SPY and the NASDAQ as well, where these few names have outperformed significantly and carried that index dramatically higher. At the same time, they may weigh on the index if these names are under pressure, but the true market may not be bearish at the same time. Am I making sense? You understand what I'm saying? So you could literally have SPY and the Qs down, and it can be bullish as all hell that day in the market. So it's something to keep in mind, right? And like, I think even more importantly for people who are trading these ETFs or any options trading correlated to these ETFs, because you better know what NVIDIA is doing. If you don't know what NVIDIA is doing, I don't care what you think of SPY, right? Doesn't matter what you think of SPY. Or vice versa, or whatever you want to put it. But it's not the market anymore. It's not the market. And I think we've been seeing more of that here too, right? Because like you look and while everything was getting its rear end kicked, right? You got spec names and AI names and tech names. I mean, the chart of the NASDAQ just looks basically like in NVIDIA. Right? It just looks like NVIDIA. That's it. You don't see any of the carnage in certain names. You don't see anything like that. So again, you guys know I like to look at RSP and some of these more equally weighted indexes just to get a gauge on the overall market. But I wouldn't be surprised to see more of that going forward. Where as bad, we've seen the bad side of it. Okay, we've seen breadth and internals awful, while the indexes have held up. We could see more of now internals and breadth improving, while the indexes really may not be going anywhere. So I think it's just a bad gauge on the market. Don't get too tied to just looking at those ETFs to get a gauge on the market. Okay. So the reason why I went into that rant anyway is because a lot of this stuff is just showing chop, has been up until this point. All right. This is what it's showing. You got divergence because SPY has went higher, but in reality, the market didn't go higher. It's been chopping around. So these divergences aren't any major thing on swaps here that we're looking at. And what else I got here? This is risk appetite. Okay. Again, I don't know if it's as correlated to liquidity as some of the liquidity guys make it out to be. Again, that's not my cup of coffee. I have no idea. But you could call it a coincidence or whatever that, we've really seen risk appetite rein in here over the last few weeks significantly. And that's kind of what you're seeing here as well. And I'm sure, some of these names selling off the way they have something to do with it. But, what got them to sell off, right? So I think liquidity, when you're trading those specific parts of the market, are important to keep tabs on. Because remember, in 2021, you had liquidity peak, Bitcoin peak, speculative stocks peak, and the indexes continue to make new highs, and some of the large cap names continue to make new highs. Now, again, back then it was Mag 7 and some of those large cap names that pushed it higher in 2021, right? 2022, 2021. Maybe this time is different. Who knows? Maybe it's defensive, cyclicals. Your guess is as good as mine. But we'll see how this pans out here. Okay. And I think, is that it on far as, I don't think anything else major here. Listen, positioning, on the positioning front, I don't think there's anything to worry about. Now, we don't have Sharpie data, so I don't know how people are positioned in the futures market. So again, makes me feel better that we're seeing a little bit of a rinse, especially in some of the things out there. So I have no knowledge on the futures data. But as far as everything else is concerned, as far as sentiment and positioning is concerned, you don't have too many crowded areas that haven't been hit yet. Huh? Again, the stuff that had me nervous got hit over the head. All right? And a lot more of the speculation these days, especially the more recent, is option related. And anybody who was in calls in any of these things, they're probably lit on fire by now. Okay. Some of the larger cap, mega cap names, again, is there concern? I'm not crazy bullish about these names. I don't think they fall out of bed, though. I just think you probably run into dead money. But that's kind of what we've been seeing, no? Like if you look at Meta, right? I get it, but net, not really going too far. Microsoft, especially here, most recent. Just think a lot of these names, because they're so overcrowded, that's all they've been buying, have the risk of becoming dead money. Okay? Now, dead money may be range-bound trades for some of you. Okay? For me, that's not something I want to that's not something I'm striving to look for, right? One, because these things are expensive, right? So, like I said, you're not playing the equity. You strictly got to play calls. And you got to really pick your spots. It's not, it's not as easy as, I bought Microsoft at 400, sold it at 420. Let me buy it again at 430, sell it at 450, like climbing the ladder. Those days are over. And now I just think you have to kind of try to pick your spots, which is a lot more difficult, right? Then, what's it saying? Easier said than done. But you can make money still trading these things if you got faith in your trading skills. On the option side, I just think, again, it's going to be tougher. But net, these names are just the problem. There's no problem fundamentally, right? These are not zero revenue names, right? They're just overowned. Every fund that wanted to buy Microsoft has already bought as much Microsoft as they can possibly buy. Any fund that is not long Microsoft, and probably even more than they want it to be at this point, is out of business. So they just get too fat. They get overowned. And that's I think, the problem. So I don't think I'd be shocked if these things fall out of bed. I don't think they fall out of bed. Now you go down to some of the larger cap AI names. Maybe it gets a little more dicey here and there. But I think the more you see a correction in that space, if you think AI is going to be around, you probably get an opportunity there, if they correct enough. And what I'm talking about, some of the semis, right? So some of, again, the quality AI names. But, you want corrections in these things. You want corrections. And that's it. I think I covered. Again, I don't want to be, because you guys Again, bearish is not the right word. Cautious is the word. Definitely cautious. I've been pretty cautious. I'm feeling better about things, but at the same time, like I don't want you guys. I don't have anything that I'm excited to buy, right? Like Merck didn't excite me enough to buy. Like I know some of you play Lily, and you had a nice hit there, right? So I think it's going to be different for a lot of us. Some may like flow in some names, some may not, and vice versa. I may end up buying a cyclical that you guys wouldn't buy if I put a gun to your head, right? Because it's slow moving and blah, blah, blah. So that's what I think is in store for us. That's what I think is in store for us. You know? Which one? SG. Was that Sweet Green? Is that Sweet Green? I don't know. Is that what it says? Sweet Green there? Let me see, because I didn't see any of your questions, commenting. I don't know Sharpies. We can't even get economic data, or the race can't even function properly. The last time I remember with government shutdown, we didn't get clean Sharpie data for a few weeks after the government reopened. So maybe some delayed data starts coming in. I don't know, guys. Honest to God truth, I don't know. I really don't know. But I'm just excited that we're going to get it again. You know what I mean? I was kind of in the dark here. So I'm just excited that we're getting it again. Even if it's a week or two from now, at least we're getting it back. Sweet Green. Yeah, these are tough, man. Let me tell you something. This is if you had to label the most under-owned group on the street where there's not a bull to be found, it's restaurants, leisure, anything with high consumer ties, right? So like if you look at consumer discretionary, but you kind of take out Tesla and you take out Amazon, retail. Now we've been seeing some rotation into some of these names this week. This week? Yeah, this week, last week. But they're ugly. They're ugly. Yeah, these things. And this is Jackson, what I don't you know me, I'm not crazy about this, right? Like if this didn't happen, I don't mind buying a stock dead doing nothing down here. But the fact that this happened, again, this is the Eiffel Tower. Right? That's what you're going to see a lot of these spec names that ran recently look like. That's what they're going to look like. Yeah, it's just exactly. It's a lot of work. You hit the nail on the head. It takes a lot of work. So, but to your point, unfortunately, this is what we might see, at least initially. We might start to see some dabbling in names like this because they're just down so much, guys. And I'm not talking about Sweet Green specifically. I don't know Sweet Green from any other name. I'm just talking about these names in general. You know what group looks decent that I haven't played in ages, but I used to love them. The hotels. So this is another group that literally is so underowned right now, but they look a lot better. Like this looks a lot better than Sweet Green. So you get because these are economically tied, rate cuts are going to help. And I've seen Marriott go on big runs, like these hotels when they get hot. So again, and we've seen big action in some of these things. I don't know if you guys remember. I think it was after COVID, right? When we started to see some big orders in these hotels. What was it? Hilton. So again, these things actually look strong. They just nobody wants to be in them because they're tied to the consumer. Yeah, hotels. I'm telling you, this is hotels, casinos, leisure, they're in there. Those names have started to look better. You know, you got some tied to China and stuff. But this is, I'm pointing out the stuff that nobody owns right now. Well, everybody is in AI tech. Everybody. You understand? So what you have is you have stocks that look like this that really don't, they look actually good, but nobody's in them. Nobody's in these things. You know, nobody's in these things. And I've seen, I mean, I remember, I think Marriott was the one that I had a nice hit on. Let me see here if I go back. Look at this. So I've seen Marriott get hot. Right? You can see here. Big time. Look at this move. Woo-wee. How crazy. And what was the other one, I think? It was Hilton. It was another name. I can't remember it. Yeah, I can't remember it. Oh yeah, again. So we haven't seen any notable flow there yet, but possibly. Wayfair, we saw some action there. Wayfair, that was one of the retail names that's been seeing a little bit of action. Look how strong this thing is. I don't know why it's so strong of late. But again, look, these things, you know, retail has been destroyed, absolutely destroyed. I'm not a big retail fan. Retail stocks, you know, I haven't had much success in retail stocks. Some of the more niche plays, like sometimes if an IPO comes public and catches a little action, that's the extent of it. But like some of the older retail names, I always lose money in those things. But yeah, dang, you know, rate cut should help. And more importantly, there's nobody in these things. There are nobody in these things. Now, what could go wrong would be the Fed is too late and shit breaks. But even then, I think because of how on their own they are, you know, the Fed eventually is going to do something. All right, so if the wheels come off, the Fed is going to have to do something. And I think these things will benefit and catch a bit. But I'm just trying to give you guys like what could go wrong, and these things continue to stay out of favor for even longer. We're kind of seeing it, right? Rate cuts get pushed down, pushed along, shit like that. But this is, you know, another group. Here's a couple of names we've seen a little bit of flowing. VFC. This is a disaster. Wayfair. Gap, I think that was before earnings. What was it? There's another one I can't remember. Few retails. Oh, Nike. Nike caught a little bit of flow. Nike. Somebody just mentioned Nike. Guys, you know what's another wild card here too? And I think not that nobody's talking about it, but you know, people aren't really paying too much attention to this whole Supreme Court tariff thing. Like, I don't even know enough about it to know like how that shakes out. But if you remember, there were rumors that the decision wasn't going Trump's way, and all these high tariff names caught a bid. You know, that's something else that can shake shit up here. UPS, FedEx. We saw some buying in FedEx recently. Let me see. Where was it? Hold on. It was actually a half decent order, FedEx. Let me see what the hell it was. But again, I don't want to gas anybody up because I'm not going to lie. For me to buy a FedEx, I'll buy FedEx. I've played FedEx and UPS, but they got to hammer it. This is what they played here. March 300th. When was this? Oh, what's today? Oh, 3 days ago. 3 days ago. you know. So again, who am I to tell you about any of these things? If any of these spots of the market you find interesting and you see some sweeper activity, that's what we're looking for here. You know, that's what we're looking for. Now, if you don't, and here's I think what people don't understand, especially STEAMROOM members, if you're in here or watching this on recording, if you don't like these groups or these names, or you don't feel comfortable playing these things for whatever reason, you're an equity player and the stock is too expensive, you're only an options player and the options aren't liquid enough, whatever the reason may be, if it's something that's not your cup of tea, you don't play it. Okay, that doesn't mean you go and buy RGTI because you can't buy the stuff that's catching flow, but you just relax and wait for something that interests you more. Again, if you're running your own money and not managing client money, besides being a degenerate, I just don't get it. I don't get it. You know, I don't get, people don't like sitting tight. You know, like let me tell you something. I can come on these webinars and I can be an uber bull and people will love it. I can be an Armageddon bear and people will love it. But the one thing people don't want to hear is chill out. They don't want to hear it. They rather lose their effing money than chill out. It amazes me. It amazes me. Amazes me. But it's the truth. If you can't chill, you better have a lot of money because you're going to burn a lot of it. If you don't have the ability to chill, I hope you got a heavy stream of money coming in from somewhere. Yeah. Oh, Blackjack, you just hit the nail. I can't say it any better. You just hit the nail on that. There's no better feeling. You don't have to, like, I get it. You don't think like anybody would rather, be short and catch the short, but knowing that shorts are nearly impossible, okay, and especially when the setup, you're really unsure of whether the market's going to sell or not, being in cash is the best thing in the world. It's a win. Oh. I thought it said Jackson. My bad, Jason. Listen, I can call you what I want. It's my webinar. I can call you whatever the hell I want. Sorry about that, Jay. Yeah. See, and listen, again, I'm not talking to all of you. You know what I mean? But I'm telling you the truth. And that's why you see on social media that these perma bears, right, with their 1929 charts, believe it or not, as soon as things go sour, you're going to see the whole crowd flock to them like they're Nostradamus. We see it over and over again. You saw it in 2022, right? And then they get buried on the short side, and then you get the perma bulls that just say up, 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 keep buying, up, 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 and then they all flock to them, right? And then they get buried. If you don't have the ability to chill out and wait for your setup, you're going nowhere in this game, no matter what type of player you are. No matter what type of player you are. Buy calls and chill. Exactly. But honestly, got you. Now, again, chilling can mean a variety of things. Okay? Chilling could be your day trading, intraday scalping to bide your time, right? That could be your chilling. So your definition of chilling could be completely different than somebody else's definition of chilling. But if you're out there to catch that big fish, that big trade, no matter what the environment, you got no shot. You're buried before you even start. You know? And it's usually people have a bias, right? They're bullish. They don't want to sell. They're holding, or they bought a little late, so they don't want to hear raise cash. But that doesn't change, getting lumped up on it. But no matter what, I think, again, that was me seeing the light in this game. And you guys know, I'm the first to admit, I'm no trader. I'm no Jesse Livermore or whoever the hell his name was who committed suicide. But if I didn't wait around for kind of more of that fat pitch, I got nothing. I got absolutely nothing. I have no choice, though. I have to. I have no choice. But I get it. We all want action. Nobody wants to hear that. Nobody wants to hear that. Sit tight. We all want to do something, especially when you're in front of the screen. No, I'm not even trying. I'm not even the humble shit. All kidding aside, that's not even the humble in me. Okay, I'm being dead straight with you guys. As far as trading and skills of trading, I am not a good trader. And that's not even humble nonsense. I'm being dead straight with you guys. The only ability I think that I have that I can do well is waiting around for kind of my environment, my climate, when things get a little bit easier, and getting a little more aggressive into that. I'm being dead straight with you guys. Oh, God. No, but honestly, got true. I'm telling you. Like, if you put a gun to my head and said, all right, go long and short right now, every day in the market, I'd make mashed potatoes out of that account so quick, it won't know what hit him. It won't know what hit it. If you put a gun to my head and said, okay, I want you to trade this market, both sides, long, short, no matter what, you got to trade. I'll take that $1 million account to 20 grand before I knew what hit him. Honest. But, again, you got to be honest with yourself. No, in this game, who are you kidding? Who are you kidding? But that's, again, if I was to pat myself on the back, the only thing I do well enough is waiting for that, as they say, that fatter pitch. You know what I mean? That fatter pitch. But again, I have to do that. Otherwise, I get nothing. Yeah. So anyway, listen. The moral of the story is, again, I feel better. I definitely feel a lot better about things. I'm not going to lie to you. I feel a lot better about things. That's not to say the market can't be rattled here. The other thing, too, like this whole government reopening, where you start to get data back, it's a shit show. So volatility lingering and being around, that wouldn't surprise me. But I think if you've been in more of an elevated cash position and waiting, I think it's setting us up well going into 2026 here. Think about it too. Like, you had a lot of people off sides chasing these AI names, thinking this seasonal end of year rally, right? They got caught. You had a lot of good, and I don't want to sound like celebrating people losing money, but I kind of am. But you know what I mean, right? You had a lot of a lot of offsides speculation out there that got caught nicely here. And that's what I think we're seeing that resolve right in front of us. And you're like, you guys see, you're getting some healthy pullbacks out there, right? Like I'm sure Sahil, T, if you're still out there, Tree, I'm sure you already have a list of names that you're licking your chops over that you didn't think would get to where they're at right now. Yeah, no doubt. Fedora, that's honestly, the more surprising thing, Fedora, and I said it a few times, that we haven't seen more of it. We haven't seen more of it. Because like I told you guys, for those of you who traded that late 90s bull run, you know what I'm talking about. After that 98 correction, which it felt like a crash, that 98 correction. Okay? That's before the 99 rip. Okay? That 98 correction knocked every bull upside their head. Everybody thought it was the end. I told you, I just got my Series 7's license, became a broker. Okay? And that's when the Asian Contagion 98 hit. I'm all excited to start building my book, put some money to work. People are quitting. Everybody in the firm's quitting because they blew up their book. It knocked the hell out of people. But the point I'm making is after that, that's that 99 run. And literally through that 99 run, it felt like every 2-3 months, there would be a vicious, violent shakeout. I'm kind of surprised we haven't seen more of that in this. Today, anyone wow, no way. What? I didn't hear that. Wow. Did you guys see that? What T just posted? Holy cow. For real? Damn. This goes back. Yeah, I remember that thing. I remember, you had some big blue chip names there. It was, that 2000 bubble was, again, I don't think at this point now we're not there. I don't think we can, Oh, Paulson had a great chart too that I posted. Jim Paulson. Is it Jim? John? Jim? I don't know. I subscribed to his shit, though. I forgot Paulson's last name. This was the 2000 run. Okay, now this is the rest of the market, ex-tech. Okay, so the rest of the S&P 500 rose 2.7 times from 95 to 2000. Here it's 1.6. But you could see even the rest of the market, you had kind of this case alongside internet and tech. Yeah, you had some doozies. But again, it's not to say, guys, I really don't know. We all have opinions, but we got to be honest. We really don't know. Nobody knows. Like most of us, I think, believe that this is not 2000 and AI has further to go. In reality, we have no clue. We have no clue. We have no clue. No idea. And that's what makes these shakeouts and corrections so difficult. If you're trying to hold through them, they're not easy. But it's normal to see in corrections, even if they got longer to go, 50% off the highs. That's easy. That's nothing. John Paulson, the guy who used to work at what was that firm? Not John Paulson. I think is it John Paulson? Jim Paulson. Yeah, Paulson and Company. Yeah. Is that him? John? I get them confused because then you got the other guy, Jim Polson. Then you got who was the Treasury guy? Hank Polson? So many damn Polsons. Yeah, the IPOs. It's different. I think what made this feel bubbly recently here is you had these bubble names, okay, the speculative stuff, the quantum stuff, they went bananas, okay? And then right after that, you had this rush into earnings that was really a short time though. You had this scramble into earnings into these mega cap and large cap AI names. But if you take a step back and look, like I don't know what's a hate. These names really like haven't done a whole lot. Oracle, right? You had this big move, and look, it gave back this whole last move here already. Like a lot of names here, like everyone talks about this name, right? But at the same time, and I get it, multiple wise, it's expensive, it's crazy. I get all that. But you get that when these growth stocks continue to perform quarter after quarter. Until they have a hiccup, you get this is fundamentally driven. I'm not saying it's fairly valued, it's definitely overvalued, but stocks get overvalued when they knock the cover off the ball growth wise. That's what you get. You know, like names like this. You know, there are fundamentals there. You know, I wouldn't put it in bubble talk. Or this one, right? What's it? CRDO? Right? I think they can use healthy digestion or correction, no doubt. But I don't think this is bubbly. Like what they report, they have ridiculous growth, right? The CRDO. Yeah, they're expensive. That's all. They're expensive, but their growth is justifying that PE right now. NBIS, yeah, this is a hot one, right? Hey, honestly, like I know you like this name, and if you believe in it longer term, this, and we were talking about this. You brought this up to me a month ago, if you remember. This is what you want. Yeah, but so you nailed it. I think you nailed it. Like this is what you want to see. Now, again, do you want to catch the falling knife and jump in, maybe for a little piece initially, right? Wait to see if it settles down. Because what would be healthy is you get some consolidation out of this at whatever point, here or maybe a little bit lower. But if you believe in this name longer term, right, to play it, this is what you want. What you don't want to do is chase into these bubbles here, right? You want to wait for this as long as it takes to when it shows up. Yeah. You feel good when it comes in, right? After you sold. There's no better feeling. But names like this that you believe in longer term, because I know you like this name, you know, this is what you want. This is what you want to see. Shook me out March 4%, 70 right before Liberation Day. Yeah. 78. Wait. Oh, before Liberation Day. Here. Yeah. Yeah, that's before it came to life. You know? This is a weird stock too to look at chart-wise because again, it was a different business, right? It changed the business or something. I don't know. There's a backstory to this because I never heard of NBIS up until like kind of when it was catch and flow and you guys were talking about it. I never heard of it before it caught flow. You know, and that's this year caught flow. I don't remember it prior to that. I feel like shit buying Oracle 2 days ago. The only thing I bought in a while, Jan 230 is only. Yeah, I mean, I honestly, to you, it's not, again, to take a shot, it's not the worst idea. Because if it comes back, it should come back in a decent way. But that's when you're catching these fallen knives, guys, sometimes you get lucky, you nail it. Sometimes you're early, and I think when it comes to these names, and I know I'm stating the obvious, but sometimes we need to be reminded. Like I said earlier, the trading is going to get tougher in these things. It's just going to get tougher. It's going to get tougher. Personally, like if I had to trade these things, I'd rather them settle in a little bit before buying. In other words, not catch the falling knife, let kind of the dust settle. But they snap back violently. Like even this meta. I don't think it's the worst idea down here for whoever likes it. I guess just a different type of trading. It's a different style of trading. Yeah, well, Oracle, the problem with Oracle and what started spooking folks is that you got there's credit default swaps have been widening out. So you definitely got some concern about their debt. It's weird because this is new. Nobody really knows how this is going to all shake out. Right? So you get that, people are uneasy about it because it's something new. But is it the dagger in these things? I don't think so, but what the hell do I know? But once this cleansing runs its course, unless we get really lucky on the liquidity front, which is a possibility. Like some people think that because of the Fed dragging their feet, they're going to have to implement some form of QE in 2026. That would be nuts, So you never know what's in store here. But I think it's kind of what we have now lingers liquidity-wise, right? And you get the Fed starting to cut gradually and stuff like that. I think fundamentals are going to come into the picture again. People are going to start worrying about earnings and growth, and you're going to see names that have been chopped here but continue to do well fundamentally. They're going to catch bids. And the ones who aren't or don't have fundamentals, obviously they're not. But again, who even knows if, nobody knows the environment. I think that's the tricky part here. Nobody knows how this is going to shake out. I tell you, some of the guys I follow, I posted the link in market updates for anybody who, STEAMROOM member. If you scroll up yesterday, I posted it. One of the people I follow liquidity-wise wrote up, it's quite lengthy, but you can breeze through it when you have some time. That at some point, the Fed's gonna have to do something. Right now, liquidity is going to be a problem, at least for the certain parts of the market that need liquidity. Yeah. So, again, but I don't, I keep saying that it's not my space because it's not. I really have no idea. I have no idea. All I know throughout my career is when that liquidity tailwind, it's no coincidence these spec names catch crazy bids. And when that goes, they can go bidless. And I love trading those names. So don't think I root for that. All right, everybody. Anybody have any last questions? Anything at all? Any Steam Room members have any questions or anything? So to put a bow on it, again, I think what we were concerned about, we're in the process of seeing that resolve now. All right, we're getting the process is being played out. Maybe there's some more to play out, but I honestly think we're closer to the end of that process. And if that's the case, even some of the stuff that we were concerned about, there are probably going to be trading opportunities there because they're so oversold. All right. So let's see how it shakes out. Again, for those of you not in the Steam Room, we offer a free trial. You could actually go to wallstreetjesus.com and get a link there. Otherwise, I'll talk to you guys next Thursday. And Steam Room members, we do it again tomorrow. Yeah, let's see. All right. Have a great night, everybody. Thanks for stopping by, as always.